DeepSeek R1 is all anybody's talking about this week in the world of AI and in the world of startups generally, and they reportedly pulled this off for less than $10 million as a side project. Now, it's not clear if that's actually the case or if that's just the narrative that they're pushing, but it does raise a pretty interesting question. If building a powerful AI model is possible with way less capital than everybody thought, then can India do it too? Welcome to our weekly Indian startup news show here at Backstage with Millionaires. I'm Caleb Friesen, your host, and let's get into it. So one of the reasons why the DeepSeek story got picked up, it got so much publicity, is that a lot of people thought that you had to be one of the wealthiest companies in the world in order to play the AI game. Companies like Google, companies like OpenAI, which is backed by Microsoft, or Anthropic, which is backed by Amazon, and there were a handful of well-funded startups too, but DeepSeek just proved that that's not necessarily the case. And now a lot of Indian entrepreneurs are thinking of stepping up to the challenge of building massive, influential, foundational AI models. Last week, for example, Aravind Srinivas, the CEO of Perplexity, made a bold offer, $1 million and 5 hours of his time each week to any team building an open source AI model under the MIT license. And he's not stopping there, because if someone beats DeepSeek's benchmarks, he'll add another $10 million. And this challenge is already gaining attention. One of the first responses came from Sarum AI, a company that's been working on sovereign models combining deep reasoning with Indic language skills. And they raised $41 million in 2023 and launched an open source foundational model supporting 10 Indian languages last year. And now they're looking to push things even further, and they want Aravind on board. Then there's Smallest.ai, and they claim to have built an AI-based voice generator that's better than 11 labs, and they did it at a fraction of the cost, which could be huge. Another contender is Futurix, which recently launched Chive, a compact 4 billion parameter large language model, and while it's not yet beating GPT-4, it's already just 2 points behind in reasoning benchmarks, and that's impressive for such a small model. And we can't forget, of course, Bhavish Agrawal, the founder of Ola Electric. He has been vocal about India building its own foundational AI models, and his team has the money, but their actual achievements in the space have been a little bit questionable so far. But now the conversation is moving beyond startups. The government of India is getting involved too. Abhishek Singh, the senior official in the Ministry of Electronics and IT, recently announced that India is calling for proposals to build its own foundational AI model. And his argument here is that Western AI models are trained on non-Indian data sets, and they sometimes generate inaccurate or inappropriate responses for Indian users. And if India wants AI models that are truly understanding of Indian languages, culture, and contexts, then it needs to build its own. The timing for this couldn't be better, because with major breakthroughs in AI efficiency and cost reductions, this might actually be the best opportunity India has at ever developing a truly competitive foundational model. But of course, the big question here is, will India take advantage of this moment? What do you think? Could India build a game-changing AI model? Let us know in the comments down below. All right, next up in the news, but continuing to talk about AI here, Sridhar Vembu, Zoho's longtime CEO, is stepping down, but he's not leaving the company. Instead, he's taking on a new role as chief scientist, a move that signals Zoho's increasing focus on artificial intelligence and deep research. Sridhar made it very clear in his announcement that Zoho's future depends on staying ahead in AI and research, and beyond his new technical role, he's also continuing his personal mission of rural development in India, which is something that he's been passionate about for years. All right, next up in the news, and after Zoho here, Zomato is making some changes to their leadership too. The company has brought back former executive Shalin Bhatt to lead their dining out business. Shalin is an alumnus of IIT Kharagpur and also IIM Ahmedabad, previously serving as Zomato's head of growth before leaving in 2021. He rejoined Zomato last year in July, and now he's stepping into a role that was left vacant by Sankalp Katoria, who exited last month. And the timing here couldn't be more critical, because Zomato is currently migrating its dining out users to the new District app, which is set to become the go-to platform for all of Zomato's going out services. And the early response here has been strong. The app has already crossed 6.5 million downloads, and Zomato's going out business, which includes dining, live events, and ticketing, is growing fast. In the third quarter of FY25, their revenue from this segment jumped more than 3x to 259 crore rupees, but not everybody is happy. The National Restaurant Association of India has raised concerns about Zomato and Swiggy's dining out services, particularly their bundling of payment gateways with table reservations. Restaurant owners are argue that these platforms should focus on expanding reach rather than controlling customer relationships. Now, Zomato's troubles with the NRAI and the slow growth of their core food delivery business have impacted their stock prices as well. In fact, Zomato's stock price is down by more than 25% from their peak in December of last year. But it's not just Zomato. The Nifty is also down by more than 10% in the last 6 months, and good stocks like Tata Motors and Reliance are available at a 20 to 30% discount. Now, some of you might have been in a situation when the market dips and you see an opportunity to invest more, but you've run out of cash to invest. And if you're in a similar situation now, then I have a solution for you. Let me introduce you to today's sponsor, Yenmo, a YC-backed fintech startup based right here in Bengaluru. They offer loans against mutual funds at an attractive interest rate of just 10.5%. And with Yenmo, you can access loans against your existing investments without having to sell them. And what sets Yenmo apart is its interest-only payment structure, which significantly reduces your monthly financial commitments. On a 1 lakh rupee loan, a standard EMI at 10.5% interest would cost 8,815 rupees per month. But with Yenmo's structure, you pay just 875 rupees per month, covering only the interest. And plus, you're charged interest only for the amount that you use. Now, even if you don't need funds right now, opening an account with Yenmo gives you quick access to money whenever you need it, whether it's for investments or other needs like buying a new phone, for example. So check out Yenmo the next time that you need some urgent cash. I'll put a link to Yenmo in the description down below. And thanks to Yenmo for sponsoring this video. All right, next up in the news, Zepto is changing how they run their dark stores. As they gear up for their IPO, they're moving from a licensee model to a franchise model, giving them tighter control over operations. In the licensee model, Zepto would simply give businesses the right to use its brand and systems, but these businesses had more independence in how they ran the stores. But with the franchise model, Zepto has much more control because franchise owners follow strict rules set by the company, everything from store operations to inventory management, ensuring a more standardized experience for Zepto's customers. With more than 650 dark stores in operation and plans to expand to 1,200 by March of 2025, controlling the experience for their users becomes much more important for the company. And with the new franchise model, Zepto is offering store operators a 3% commission on gross sales, which is higher than Blinkit's 2.25%. But setting up a dark store isn't cheap. It requires a team of 35 staff members and an 83 lakh rupee investment covering deposits and licensing fees. Franchisees also have to meet very strict performance targets, 90% of orders packed within 120 seconds and inventory processed within 3 hours for fresh produce and 7 hours for packaged goods. And missing these targets leads to penalties ranging from 1,000 to 5,000 rupees. All right, now let's move into some very quick startup updates here. First of all, after delaying employee salaries and struggling to raise funds, content-to-commerce unicorn The Good Glam Group is now facing another major setback because its top investors, Accel, Bessemer Venture Partners, and Prosus have all stepped down from the board of directors. Next up, Paras Chopra, who bootstrapped his A/B testing platform Wingify since its inception in 2010 and reached an annualized revenue of $50 million, has sold the company to private equity firm Everstone in a deal worth $200 million. All right, now let's move into the funding news segment for today's video. This week, Indian startups raised $153 million, which is lower than last week's $232 million, and it is also slightly below the trend line. But now let's take a look at some of the companies that raised funds this week. The first one I want to talk about here is Bengaluru-based edtech startup Leap, which is helping students to study abroad by providing end-to-end services, including test preparation, university admissions, student loans, and visa assistance. And they raised $65 million. Following that, we have Bengaluru-based Astrom Technologies, an Indian deep tech startup specializing in high-speed wireless communication using satellite and millimeter wave technology, and their goal is to provide affordable, high-speed internet in remote and rural areas, as well as improving communication for industries like defense, telecommunications, and space, and they raised $10 million. After that, we have Bengaluru-based gaming startup MetaShot, which makes an Xbox-like gaming platform for cricket, allowing users to play cricket virtually with their friends using a smart bat. And they've raised 11 crore rupees, that's $1.27 million. Next, we have Chennai-based 3D printing startup Think Metal, whose flagship product, System T1, allows manufacturers to produce metal parts such as molds, dies, jigs, and fixtures within hours at half of the traditional cost, and they've raised $800,000 in their pre-Series A round. And then finally, we have Jaipur-based AI startup MedMitra, which is developing autonomous AI agents to assist healthcare professionals in diagnosis, treatment, and prognosis. And their platform integrates data like patient medical history, lab reports, prescriptions, and advanced imaging to provide accurate and personalized care for patients. And they've raised 3 crore rupees, that's about $350,000 in their pre-seed round. All right, that is all the Indian startup news that I have for you all this week. I really hope that you enjoyed the video. If you haven't already, go check out the video that we made about the top 10 startups from Himachal Pradesh. But either way, I'm Caleb Friesen, and this has been Backstage with Millionaires. I'll catch you in the next one.